Welcome to the RSI Trade of the day. My name is Benjamin Poole, head trader here at Verified Investing. What a wild day it was yesterday. A couple of my levels hit. And I did have a comment on my video yesterday saying PLTR flushed through all of my support levels. And I do want to say I apologize for not being a little bit more specific on the particular trade of the day. So I also turn on pre-market when I enter trades. And so that first level that I gave you guys actually hit perfectly. It did drop below it slightly, but then got a pretty substantial bounce. It actually bounced 3%. I didn't give you an upside target. I actually took that in the live day trading room because I gave it to you guys. So I'm that confident in these levels that I said, all right, guys, if it hits here pre-market, I'm going to go ahead and get in. And I got into that trade and I exited for about a 1% gain on it. And this was a scalp, right? So I wasn't looking to hold longer term. We took $1.50 per share on that. And then when it came back down, I ended up taking it again and took another winner on it. It did flush those levels. That's why you have continuous your consecutive levels below it to allow you to dollar cost average. If you guys want the same opportunities, the same guidance through these trades, please join the live day trading room where we walk you through our exact positions. You can even check the track record to see exactly the whole process of when I got in, when I got out. And it doesn't give you all my ad levels and everything like that. However, it does show you that I literally took the trade. So here's the chart of Palantir, right? We had this gap fill at 56.01 or 56.01. Okay, so let's go to intraday. Let's see what happened here. We had this big flush out early morning, but what we have to do is we actually have, 56.05. We actually have to put on the pre-market data right here, regular extended trading hours. Here's what happened. All right. It hit this level 151.06. This is what happened. I entered the trade. It did flush. It got below 151. And then look at this move. It moved over 3%. And again, I didn't give you this level or this upside target, but I entered the trade here. And it happened pre-market. We got out right as the market opened. So it looked, if you take off extended trading hours, it looks like it didn't hit. But in fact, a whole bunch of our trading floor members got this trade. And then there was a gap fill a little bit lower. And so I re-entered it a little bit lower. And then I added. I had this down sloping trend line, started to get some good positive RSI divergence, gave me confidence that this thing was going to bounce up. We ended up taking it off the table at 146.94. But you can see from this first entry level, it did bust through all those. It dropped another 5.5%, 6%. I've been screaming at you guys like, hey, you know, the market sentiment when the RSI is staying weaker is a completely different game than it is when the RSI is staying at the top. And the reason is because the selling pressure, the fear really can take a hold of somebody, especially if we're at kind of all-time high. Palantir had this great move up here. Do you notice what happened? The relative strength index. If you see this, I ended up getting out early because this was before this big rise in the relative strength index. And as you can see, I stayed away from this on the short side because the relative strength index gave me this positive or this upward momentum on the relative strength index, and see what happened with Palantir. So what I'm going to do is I'm going to look at Walmart. So Walmart had earnings and they are down on earnings. So what do you got to do on earnings is you got to look, okay, so it's down below the $100. Okay, here, hold on one second. I need to get my zingers. All right, here's the trade of the day, guys. So Walmart's down on earnings. If it continues to drop, you've got this beautiful gap fill at $95.05 from the pre-market high or low right here at $99.30 or where it's currently at. It's another 4+% drop. So my trade of the day is going to be 95.05 long on Walmart. Just knowing that there's a low pivot right here, right above the $94 level. And then you've got this other low pivot right here. This is going to be a more of a substantial pivot just based on the fact that you had support support, support, and a move higher. And so this is going to be a lot of support at this low pivot area if it decides it wants to run in there. So 95.05 is my level, and then you've got 2 additional levels, and then possibly even a third. The third level of support. But this would be $91.89. You guys, if you guys want to see something, or if I'm missing something, for example, I missed the pre-market data that we have to take into consideration when we're trading and we're scalping these things. Let me know. Let me know if there's a chart that you're looking at that says the screams overextended, and you see something on the daily time frame and you're like, hey, is this positive RSI divergence, or is this negative RSI divergence because it's highs, or something's coming to support and it's creating some positive RSI divergence. I would love to take a look at it. I would love to have you guys basically assist on my show. It would be a lot of fun. So you guys, I appreciate you guys. Gareth Soloway is going to be going live in just about 3 minutes on the game plan, verified game plan. If you guys want more of this content, please make sure you like, subscribe, ring that bell so you can get notified every day at 8:45 when the market opens, and I will be here live with you guys. So with that said, I'll see you guys next time in the charts.
Hey, everybody. Welcome to My Trading Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. Now, as always, we're going to get into the charts. We're not going to cover all the nonsense narratives that are out there or the hype. It is all about the data and charts. And really what we're going to talk about is the markets as they look towards Jerome Powell tomorrow. Again, Jackson Hole meeting going on as we speak. And again, we will get a speech from Jerome Powell tomorrow. In addition, we did get some market data and economic news this morning, which I do want to touch base on. Let's get right to it. All right, so jobless claims came out this morning. Every Thursday, these are numbers that are released. They came in at 235,000. Now, listen, a weekly number like this, it doesn't move markets, but it is something that I pay attention to as an economist and technician. The reason I pay attention is because what I've learned is if you get above 250,000 in jobless claims, you go on alert. And again, these are people filing for unemployment every week. So above 250, you go on alert. If you get above 300, it usually means recession. All right, so as we get into the stock movers, let's touch base on the S&P futures. Taking a look here, what we have is the S&P futures are trading down. This is the daily chart, but let's flip over to the intraday. You can see that this was yesterday's massive decline, and we did have a great recovery where the S&P closed nearly flat on the day. The NASDAQ did drop about 0.5% on the day because, again, tech stocks remain very, very weak. And remember, tech stocks have been the biggest leaders. And so it makes sense that you're seeing money rotate out of big cap tech and look for other names. And one of the pieces of information that we're going to go over today is looking at where to put some money in this market environment where stocks like Palantir are falling 25% in just 5 or 6 trading days. Now, it had a great bounce off of the lows yesterday, but again, I do worry that that was by the dippers on the retail side, and it may not be sustainable. So you got to think a little bit more defensively. We know on the technicals of the daily chart of the S&P, we've broken key levels. We also tagged a support level that I'll show you, which is really, really cool. But again, looking at this market, there is warning signs building more and more. Now, if we flip over to the daily chart, this is where things get spicy, guys. This is where I absolutely love showcasing how impressive and powerful charting can be when you use trend lines. And we have obviously this trend line, guys. And if you've watched for the last 3 weeks or 2 weeks, you know that I've highlighted this trend line, and we've talked about how it is totally price of the S&P is respecting this line. Absolutely. And you see again right here, this was the Meta Microsoft earnings. They were so good. Great earnings. And what happens? The stock market gaps up into that level and sells off for 2 straight days. Then the buy the dippers come out and they start to grind the market up again. Then you get this beautiful doji right at that trend line again. And what happens? We roll over again. Now, look at the low yesterday, and this is where things, again, get so fun for me. So we talked about this yesterday. I literally gave this trend line as a potential support level. Take the low here from May 23rd to the low from June 23rd and drag it through, and what do you get? You get your exact low yesterday. That is amazing. And even after 26 years of trading and using charts, this stuff still blows my mind how, again, charts tag these levels. And again, you say, well, how does the market know? I mean, investors individually aren't looking at this chart. I mean, unless you're in the game plan and watching my trading game plan every day. So why do we see the reversal here? For some reason, these trend lines map out human psychology. And for some reason, when you got down to this level, all of a sudden the buy the dippers out there in the market said, they didn't, not that they looked at this trend line, they just all of a sudden they started to feel like this was the time to buy the dip. And sure enough, markets rallied off of that. Now, the problem is this, guys, and I showed you guys this yesterday, right? 1, 2, 3, and 4. So we have now hit 4 times. Now, the fourth hit is your 50-50. This is very unlikely to break on your third hit. Second hit, even more unlikely. And first hit, obviously, you never break on your first hit. Well, basically almost never. So the idea is the odds every time you hit are increasing. On the fourth hit, it's a 50-50 chance of breaking this trend line. What does this mean? Well, we didn't break it. But if we come down again, and we talked about this yesterday, in this My Trading game plan. So you've got the bounce. Now, if we come down again, the problem is on your fifth hit, the odds start to favor a breakdown. And so listen, we don't know when we're going to hit. Will we hit it today? Will we hit it tomorrow? Will we hit it next week, next month? But ultimately, what we do know is when it does hit again, the odds are now favoring a breakdown. It's about a 60-40 chance of a breakdown. And just to break this out and really teach you guys, which is what I love about these trading game plans, is that it's all about teaching. But let's just say we bounce again on the fifth hit. Your sixth hit now has a 70% chance of breaking. All right. So again, understand the mechanics of the charts, and you will literally have a way better financial future. Because you start to understand that everything is based off probability. And Walmart is down. Now, they missed on earnings, but they beat on revenue. Okay, let me say that again. They missed slightly on earnings. They beat on revenue. What does that tell us? What does it tell us here? Okay, if a company like Walmart, a retailer that does get impacted by tariffs, they missed on earnings. So what does that mean? It means prices went up, for them, their wholesale prices because of tariffs, but they missed on earnings because they didn't pass those costs fully along to the consumer. If they did pass it all the way along to the consumer, then earnings would have been equally as high, right? They would have made expectations. The reason they beat on revenue is because people had to pay those higher prices that were passed along. And again, that translated into slightly higher revenue. But again, essentially, Walmart even said they are having to pass some of these tariffs along, which again, then increases revenue, but hurts earnings because they didn't pass it all along to consumers. But ultimately, my point is that we are slowly seeing the impact of tariffs in the retail sector. This chart looks very interesting of Campbell's company. This is Campbell's Soup. You can see, again, it's trying to break out. It may have broken out. I love this bull flag right here. It's, again, above this downsloping trend line. These are names where, again, listen, they're not sexy, they're not flashy, but they've been beaten down. I mean, look at this beatdown that this stock has taken versus, Robinhood or a Palantir or an NVIDIA. And this could be where you go as a defensive trading opportunity. And listen, it's not amazing, right? It's not like, oh, yay, this Campbell's is going to go up 200% like Palantir in 6 months. It's not. But it pays a dividend, and it could be a good place to store money. What I like to say to people is that during recessions, is Campbell's going to be really impacted? I mean, they kind of make these low, soups and this and that. People still have to eat. Right. And in fact, I wasn't going to go into it, but when we get to commodities, and I got to keep an eye on the time here, when we go into commodities, I'll look at wheat and corn, both beaten down. I actually think there's a trade there because in recessions, if the economy slows, people turn to cheaper goods, which is like cornmeal and wheat. Right. And people still have to eat. But again, can they make the determination to not buy that latest iPhone as soon as it comes out? They sure can. Right. And I think people are already making those choices and therefore beating down things like corn and wheat as commodities actually, to me, look interesting. All right. Into Bitcoin, guys. Bitcoin, after a small bounce yesterday, starting to come in. One thing that I gave you guys, and I gave you guys crystal clear guidance on this. All right. We had the double top and the reversal candle. That was never a good sign. You don't want to see a new all-time high made and then a massive reversal a red candle that engulfs the previous green candle. That is not the way. If you're going to go higher and higher, that's not a good start, in other words. Then we came down and we had this upsloping trend line. We broke it. We confirmed it. You did get a bounce yesterday. But again, the question I would have is, are you starting to make a preliminary bear flag? And we don't know yet. It's too preliminary. It's only 2 candles. But again, if this continues to go like this, it starts to favor another leg down. I still think 110 would be your next support area, kind of right in this area right here. You can see this high as well as right there from the July and June high pivots. And if it breaks that, then you're heading down towards 100,000 on Bitcoin. Again, Bitcoin's had a great run. The chart now, like gold, interestingly enough, are both favoring a little downside. Although, again, you could look at it, the midterm on Bitcoin is still bullish, just like the midterm and long term on gold. So that's good. I'm just to remember, I'm a trader, so don't get your panties in a bunch that I'm talking about near term. Like near term is just near term. Doesn't mean long term. I still love Bitcoin long term. But again, near term is just that. Quickly looking at ETH, guys. ETH was a beauty here. Look at how ETH is stronger here, that it hit this level I gave you guys at around the 40.70 level and got a nice bounce. It needs to hold this level at 40.70 though. If this breaks, you'll have some additional support around 38.80. If that breaks, you start heading down sharply lower into the low 3,000 range. All right, guys, let's go to my final thoughts. So listen, we've covered a lot today. We have a market that is hanging on by a thread. You saw Palantir yesterday dropping. By the way, I gave you a level yesterday and it ended up rallying. It pierced that level and then rallied and ripped right back up above it. Today, Palantir is showing kind of neutral to a little weakness. But the market, again, to me, yesterday was an opportunity where a lot of buy the dippers saw Palantir. They had wanted to buy it at 180, 190. Now it was at 142, 145. And they said, oh, this is the greatest deal. And they bought in. If we can't hold these gains on something like Palantir, if NVIDIA starts to sell off, and if we see a break on those key trend lines on the S&P and the QQQs, the parallel on the QQQ, that trend line on the S&P, this market does have significant downside in the near term. Now, the one caveat is we're waiting on Jerome Powell tomorrow. Can he save the day or does he punish the markets? What is he going to do? I'm not going to pretend to know, but I will report on it tomorrow, whether it's, again, early in the day or late in the day. I will make sure I fill you guys in and really just look at the price action in the market. Look at the 10-year yield, the dollar, and where the markets go. That will tell you everything you need to know about what he says. Is he hawkish? Is he dovish? How does the market take it? All right. On that note, I got to get going, guys. I got to get to the live day trading room. We had another stellar day yesterday. By the way, the options trades in smart money options, we crushed it yesterday. Stocks, we had winners. Beautiful. We had a short on Palantir, by the way. We covered that. That was a beautiful thing yesterday as well. Commodities, you name it, guys. It has been amazing here at Verified Investing. Do check it out, folks. They are a rock star track records. I love you all. Thank you so much for tuning in, and I'll talk to you soon.